Crypto has been seeing a huge decline in prices for quite a long time now, and people often call this crypto winter. But what's really going on within the crypto space right now? We are going to take a deep dive into the current state of the crypto market at the moment. But before we get into the video, welcome to Wealthmatic, your regular dose of crypto, wealth, and millionaire inspiration. Here we talk about the latest news, tricks, and tips in the world of crypto, so be sure to subscribe to my channel. We actually haven't had a crypto winter with the continuing increase of interest rates. However, we have one right now which can raise certain questions for a lot of users in the crypto space. The main question is whether this is a huge concern for selling off crypto in the market, and how are other risk assets affected? Over almost a decade, the Bitcoin community has made a pretty bold claim that crypto, or Bitcoin in particular, would be a strong hedge against inflation. But in reality, that has not happened yet. What we see right now is that Bitcoin is deeply correlated to equity markets of today, mainly tech stocks and the Nasdaq. As soon as there are sell-offs happening in the Nasdaq, Bitcoin also instigates movements that seem related to the activities going on with the Nasdaq. But note that this is not only limited to Bitcoin, as we can also see significant movements in other cryptocurrencies like Ripple, Ether, and many more. Here's what I think. There is a direct correlation between traditional equity markets to the crypto space, judging crypto itself at looking at it historically. Now let's go back somewhere from 2017 to 2018 when crypto saw a huge boom, which was then collectively known as initial coin offerings. Because crypto companies saw massive positive results, they issued new coins and raised millions and millions of dollars worth of money. But then a collapse happened shortly after. To compare this with the crypto situation today, we are seeing premier projects launched by various crypto companies. To name a few, we have those algorithmic stablecoins with Terra USD and now with Celsius. Celsius is an all-new lending platform that offers people up to almost 20% yield. Now that may seem amazing, but that's actually a red flag, as it shows that new business models are coming undone in spite of the intensive volatility that we see right now. With these new events coming up, there's no doubt that we are still up to see further collapse, now in various aspects. This just leads us to look forward to upward movements in the stock market and see how crypto also moves in correlation to these movements in stocks and other traditional assets. Perhaps crypto will be able to learn to deal with its own issues without adapting to stock movements. Now, one of the main factors that has supported the bull run of crypto for the past years has been that network effects will take hold, leading to the involvement of large institutions. As we see over the last few years, large institutions indeed played active roles that involved themselves in crypto, like Bitcoin, for example, as well as other cryptocurrencies. In light of this, a lot of people are led to believe that there's no chance for Bitcoin to go down like what happened in 2017 to 2018, as I previously mentioned. However, some people fail to realize that although large institutions are actively involved, there are still key parties that haven't tapped into the world of crypto, with the likes of large banking players, investment players, and profit generation players, who are much more stable given that they are in the more traditional operations. The reason that they're still not involved in the crypto space yet is that they are still unsure of the nature of crypto as a whole. They're still highly concerned with the extreme volatility, the lack of standardized regulations, and more, which is basically the reason behind them not jumping in just yet. Now, there's been a lot of talk that once crypto becomes stable and the regulations become concrete, these large players will then jump on board the crypto space. But what we see right now further strays them away from crypto as the huge shakeout is happening. And we haven't seen the end of the shakeout period just yet, as we are still posed to expect more collapses and more downfalls. This is where multiple business models are put to the test and see how they can withstand the harsh conditions that we are in right now. There are still companies who find light in these situations since they believe that the shakeout period will really bring out the tenacious ones and get rid of the low-quality projects in the game. However, they must consider the long-term effects, or more likely the long-term damages that are incurred with its current situation right now. There can be damage to a company's reputation, which further affects how investors play the game overall. Going back to Bitcoin, this current shakeout has made a huge impact on the cryptocurrency as well. We are now seeing a floor price below the 22,000 mark given the movements that we see in equity markets, as well as the macro environments such as interest rates and more. And truthfully, there's no hint of anything that signals an increase in the Bitcoin price right now, despite hopes and analysis by a multitude of experts. At this point, let's talk about price and value. There are a lot of people who think that these two are synonymous, but actually they are not. For context, let's take a look at Ethereum. Right now, bad investors believe that just because the price is high, the value is also high. And when the price is low, then the value is also low. This then leads them to buy at the top and sell at the bottom. Now for Ethereum, the prices are definitely going down as of the recording of this video. However, over time, the value of Ethereum is actually rising as more people are brought in every day, more projects are launched, more addresses are built each day, and overall a much larger network effect. In other words, Ethereum becomes more and more valuable to the world as it increases steadily. So the price of Ethereum is actually pretty low right now, so we can say that Ethereum is currently undervalued. So in line with this, I actually think that this is the perfect time for you to buy. Just to reiterate, I am not a financial advisor and I'm only giving my opinion about current market conditions. With that being said, always keep in mind that you should only buy what you can afford. I'm not telling you to put everything you have in Ethereum right now, but looking at the crypto market from the perspective of the last 10 years, this is a prime time to buy, dollar cost average, and or improve your position. Now, if you don't have enough to buy right now, then the best thing you can do is to hold. You should never sell at significant downturns, as you can see right here. Instead, this is where you should buy as prices are significantly low. A lot of people are too afraid to buy at this point since maybe they're expecting the prices to go a little bit lower. But what they don't understand is that there's absolutely no guarantee at all. We can never know when the prices go up and down, but one thing is for sure. Ethereum is undervalued right now, and I strongly recommend you to buy before it's too late. And that's basically it for this video. Check out other videos on my channel if you are interested in more crypto and money-making content just like this one. If you have completed the video, hit the like button and tell me what you think in the comments below. Make sure to subscribe to my channel and hit the notification bell to get notified whenever I post something new. That is it for today. See you in the next video.